Hello, my name is Terry Holohan. I'm the Chief Executive Officer of Resolute Mining Limited, and I am based in our London head office.
Hello, my name is Chris Eger, and I'm the Chief Financial Officer of Resolute Mining Limited, based in London, United Kingdom. Now, both myself and Terry Holohan, our CEO, will walk you through our latest investor presentations in order to highlight the key points of our business.
Chris and I will take you through our formal presentation, and the key mantra here is positioned for growth. We have two producing gold mines. We have the Syama gold mine in Mali and the Mako gold mine in Senegal. But we also have a very exciting exploration portfolio. I'll talk to it a bit later, but we've been finding gold in the Syama operation over the last couple of years at less than $10 an ounce. We are listed on the ASX and the LSE. Our market cap presently is about $500 million US dollars, but we suggest that it's come off a lower base and it's still increasing as a function of our production and our cost focus. If you look at the total resources, we have 11.2 million ounces across the group, and we're producing about 330 to 340,000 ounces. That already suggests that we should actually be producing at a lot of higher throughput than that. And this is a focus where the group is now, given over the last 2 years we've stabilized our operations. The Syama Mali operation, 10.5 million ounces of that is, as you can see, it is a flagship based on numbers. We've got an ore reserve of 4.1 million ounces. We have two plants, which in total treat about 4 million tons per annum, and the grades are around about 2 grams a ton. Our costs are high. We're at the 1400, 1365 sort of levels at this point in time. However, I would suggest to you that over time, these numbers are going to decrease, and Chris will take you and show you some of the numbers that we expect to be achieving over the next couple of years. The Mako mine, it's a conventional open pit operation, 0.7 million ounces of mineral resource, 0.5 reserves. This year, we've spent a lot of capital on a final strip on this mine. And what that has done is opened up 330,000 ounces at 2 gram a ton material, which we're literally going to be harvesting over the next couple of years at very low cost. This year's cost is $1,470, and that is because of the high strip that we've been focused on to free up all this gold for the next couple of years. And on the exploration side, Syama itself is part of a land package of 85 kilometers. It's greatly underexplored. Over the last 2 years, we've returned to the drill bit, given we started making some money again. Finding gold there at less than $10 an ounce, we found 3 million ounces, and that's the area that we're going to start expanding into by 2025. We have already started with the long lead items, and I'll talk a little bit about that project that's ongoing. We've also recently signed a couple of JVs up at Syama in Mali, as well as in Senegal. We're very keen, and we expect to be able to extend the life of mine of the operation in Mako, and we're actively pushing hard 2 other projects, Lamini and Tomboronkoto, which are less than 15 kilometers from Mako, and we are hitting goals there at this point in time. We also have a portfolio in Guinea. We expect over the next couple of years to be able to expand into operations in Guinea, and we'll have our first resource in Guinea, we expect, by Q1 of next year. If you look at the investment highlights, as I mentioned, it's an operational turnaround. We've had a balance sheet where we owed $229 million in 2021, and we've systematically reduced this over the last 2 years to become cash flow positive. And this put us in a great situation now for the next 2 to 3 years, where we can look at organic growth, Syama, and extensions to Mako, and also inorganic growth over time. But we feel we're in a very, very strong position now. We're producing 350,000 ounces. We're starting to produce healthy cash flows. Chris will give you a bit more information on that a little bit later. And as I mentioned, we've got some great and exciting exploration opportunities in both Guinea and Senegal. If you look at the ESG, we tick the boxes there. We are members of the World Gold Council. We are in the 82nd percentile as measured by Moody's and S&P. We We have great relationships with local communities in West Africa. We also, on the safety, we've got a very, very impressive safety record. We haven't had lost times in injuries in Senegal for over 2.5 years now, and we haven't had an LTI also in Syama over the last 4.5 years. And if you think about that, Syama is quite a complicated operation with an underground mine, an open pit mine, or several open pit mines, and 2 major plants. So it's quite an achievement. If you look at the, as I mentioned, the Syama, we do measure ourselves against other operations. We are finding a lot more gold. The resources are growing, and we expect to develop this project at Syama into a world-class mine over the next 3 to 5 years. We've already kicked off with the phase 1 to take it from 220 to 250,000 ounces plus in the next 2 years. And we're already starting our work on our project to take it up to 400,000 ounces plus in 3 to 5 years. If you look at the ownership structure, we own 80% of the mines in Syama. The main mine at Syama itself. We also have a satellite mine, Tabakoroni, which is part of our 400,000 ounce expansion later, where we own 90%. We are mining both sulfides and oxides, and if you look at the grades there, sulfides about 2.68 gram a ton. That's quite aggressive. We've also managed to find, as I mentioned, 3 million ounces of material, which is new to the project, at nominally at 3 gram a ton. We'll show you that shortly. And we also have oxides at around about 1.3 gram a ton. We do own and operate a sub-level cave. It's now in the 5th year of operation, and it's operating way above, or far better than, the original design. The phase 1 expansion, and this is where I was saying we want to take our Syama operation up to 250,000 ounces by treating 4 million tons of sulfide material. That project kicked off earlier this year, at the start of this year, and we're going to start doing the civil works in 2024. That's the dark blue blocks at the bottom there with the construction, and we expect that to kick in terms of production in Q2 of 25. And this will have a positive impact on our operating costs by producing more units for the fixed operation. At the same time, as I mentioned, we are running through the phase 2 expansion, where we think we can take this operation comfortably over the 400,000 ounce per annum sort of level. And that again will be a step change with the operating cost reductions. If you look at the Syama, as I mentioned, it's an 85-kilometer strike. Mining has been ongoing here for 30 years. It was originally started in the top section there, just below Syama North. Syama is the main processing complex for the whole 85 kilometers. Work was originally completed in the area Syama North. However, we moved back in there these last 2 years, and we've delineated open pitable material of over 3 million ounces. And this is the material that's going to be accessed from 2025 to complement the underground material that we've got running on the sub-level cave. As you can see, there's a lot of workings going down the belt. However, there's a lot of space for more ounces to be found here. And if you look at the grades on the box there, you can see it's a nominal 3 gram a ton deposit. That is going to compete very easily with our underground operation, which is around about 2.6 gram a ton. On the Mako mine, as I mentioned, we've spent a lot of money this last year on here just to do a major strip. It's a nominal 2.1 million ton operation at just over 2 grams a ton. Recoveries are high. It's because we've done a lot of the capital over the last year, the operating costs of this going forward over the next 2.5 years are going to drop to about $1,200 an ounce. We're very excited about this operation. We've been operating in Mako for 7 years. And as I mentioned, we've got some exciting projects in the exploration phases where we hope to extend the life of mine here when this mine closes down in 3 years' time. The historical production here is varied based on grade, but I can tell you over the next couple of years, it's going to be back over the 2 grams a ton, which makes it a very profitable mining operation. And with that, I will hand over to Chris, who will take us through the 3-year forecast and the financials.
Thank you, Terry. And now I just want to take the time to give you a few key metrics for the business. So look, as Terry highlighted, the company has gone through quite a transformation over the past several years. And as such, we last year decided to pull our guidance with respects to the operations for the future. But in October of this year, we put out a 3-year forecast to give some visibility onto where we see the business heading for both Mako and Syama, specifically with Syama, as we've announced the phase 1 expansion. So with Mako, as Terry highlighted, we expect 2 very solid years in 24 and 25. We'll be producing anywhere from 130 to 140,000 ounces. And most importantly, the all-in sustaining costs you see dropping for what is today around $1,450 down to roughly, call it $1,250 in 2024 and $1,150 in 2025. When you look at Mako for 2026, you see that the ounces drop considerably, and that has to do with if we do not find an extension satellite deposit, the mine will need to be shut down. And so in the final year in 2026, we'll be processing residual stockpiles that will only generate around 60,000 ounces. However, the company is becoming very confident in the ability to extend the life at Mako. And so we hope that 2026 does not come through fruition. We're very much looking to try and extend the mine beyond what we have highlighted to date. On Syama, as Terry highlighted, this is our flagship asset, which today is going to be generating around 220,000 ounces in 2023. But as we look to 2024 and 2025, you can see that we're expecting around 230,000 ounces each year, give or take, and with a key focus on the reducing of its all-in sustaining costs as a result of significant cost-saving measures that have been put in place throughout the business, which we have seen starting to take effect in 2023. In 2026, as phase 1 expansion comes to completion, we expect to generate substantially more ounces in the tune of 260,000 to 270,000 ounces. But as Terry mentioned, we expect after phase 1 to have a steady state production at Syama of around 250,000 ounces. So the business has really positioned itself over the next 3 years to generate substantial free cash flow from both operations as a result of the turnaround that has been achieved and the continued cash cost improvements that we're seeing throughout the business. So what does this mean from a net debt perspective? If you look at this page on the bottom left, as highlighted, the company had a substantial amount of debt in the previous historical years. As a result of an equity raise last year, asset sales, but most importantly, a focus on cash cost reductions and operating cash flows, the company has started to generate substantial free cash in order to reduce the net debt position to now a free cash position of $2.2 million at the end of Q3. As I look to the future, we expect the business will continue to generate substantial free cash flow and continue to create fresh cash. We will use that fresh cash to either develop organic growth opportunities. We are looking at inorganic growth opportunities as well, but it's a key focus of the business to generate additional cash. Other key metrics to highlight is broker consensus has our EBITDA for this year around $180 million. Next year, that number is expected to increase to anywhere from $220 to $250 million. So when you look at our market cap in USD of about $500 million, we obviously feel we look pretty attractive from an EV to EBITDA perspective. You will not find that many other mining gold companies that have 350,000 ounces of gold trading at the $500 million USD mark. So again, we find ourselves to be viewed as an attractive value propositions for both our existing shareholders and new shareholders. So to summarize, what we find is the key value drivers for the business and investment highlights. The business and the management is going to continue to focus on meeting our production and cash and our cost guidance. As mentioned, historically, Resolute has gone through a number of tough times. So we're rebuilding the story by making sure that we meet what we say we're going to do. In addition, we will be continuing to roll out the phase 1 expansion. This is a very attractive, higher return on capital expansion for Syama that we expect to complete in 2025. In addition, Syama is a world-class asset with over 10 million ounces of gold, really needs to be a 400,000 plus producing asset. And so we started this studies for how we can take it from 250,000 ounces to 400,000 ounces. That study should be completed sometime in 2024, but that will be a multi-year, call it CapEx, in order to develop Syama into a 400,000 ounce deposit. Next year, we look to update our mineral reserve for Syama North in line with our overall update of total reserve and resources in February. And the other key value drivers for the business, as mentioned, is with Mako. We believe that Mako has a strong possibility for extension in the mine life. We don't think that many of the brokers, nor does the investment community, put value into this. But when it does, we expect substantial cash flows out of Mako of anywhere from $50 to $100 million of free cash per year with an extension of that mine life. Finally, we are exploring outside of both Senegal and Mali, and we have substantial exploration prospects in Guinea, and we hope to announce a resource in Guinea next year and look to diversify the business not only from 2 jurisdictions to 3. So these are some of the key value drivers. We think we've made a lot of progress in turning the business around. We are very much in a much more healthy state from a cash flow perspective, and we expect that to grow. We have plenty of materials on our website, and if there's any questions, please contact our head of investor relations, who is also listed on our website. And with that, I thank you for your time and appreciate the opportunity to present the Resolute story to you. Thank you.